Thanks everyone for joining. Really excited to be here today and presenting an important topic around ESG and LCA compliance with digital solutions. Just as a starting point, the chat function is disabled, so make sure that if you have any questions, you can ask questions throughout the presentation and the webinar, and we'll have a session or a section at the end of the webinar to go through those questions. You should be able to use the Q&A section or the Q&A part of which should be at the bottom of the screen. You can also turn on the captions if you need that, if you want to sort of have some captions along with the text as we go. You're also being muted, so you're not able to speak out, but happy to answer those questions at the end of the webinar. Great, so just kicking off, I'm really happy to welcome Rowan Fenn and Stephen Pell. I'll let those guys introduce themselves first. Rowan, over to you.
Thanks, Rob, and thanks very much for having me, and good morning, everybody. My name is Rowan. I'm a co-founder and CEO at RiseX.
Great, thanks. And Stephen?
Morning, everyone. Thanks for inviting me on to this, Rob. So I'm Stephen Pell, Chartered Accountant, co-founder and CEO of neoeco. I spent my career at the intersection of finance, technology, and sustainability, working as a CFO, building and selling a tech-driven accounting firm. And now tackling one of the biggest challenges, I think, so far, is the integration of financial and sustainability data into corporate reporting.
Cool, thanks very much. And my name is Robert Pell. I'm founder and CEO of Minviro. My background is really in sort of the mining and metal sector originally, and then worked in the topic of life cycle assessment, did my PhD on that topic before founding Minviro, and really working around the area of product sustainability, especially in the area of the energy transition. And you may see some familiarity between me and Stephen, not just with our surnames, but we're brothers. And although it may not look like it, I am the younger brother. But yeah, really excited to have this webinar today. Cool, so just as a context setting to introduce you to what we're going to be covering today, I'll start off by just introducing a bit more about Minviro. I talked a little bit about my background, but Minviro is a consultancy, data and software company. We work, as I mentioned before, around the area of product sustainability with a real focus on the energy transition. We use life cycle assessment, which we'll get more into during this webinar, to quantify and help companies reduce the environmental impacts of products and processes. We have a consultancy team that supported many of these clients to basically complete these ISO compliant LCAs, which allows companies to communicate about the environmental impacts of their products. We have a lot of experience in the battery material value chain. You can see some of our key clients there include companies like Tesla, some big mining clients like Rio Tinto, as well as many other clients across that battery material and energy transition value chain and downstream sectors. What we're really excited about is one of our recent launches of our software called Cycle. Now, Cycle is, as we define it, the next generation lifecycle assessment or carbon footprint software for product sustainability. It's designed for the energy transition, so really built for these complex supply chains and engineering level calculations in mind. And with some of the key things that we're going to show during the demo is its ability to connect teams within organizations and across organizations to connect data. You'll see that a big focus of today's talk is around the importance of primary data. And that's why we've got a great connection between Rowan as well. That's going to give a bit more information on that. But also the Cycle platform can be really powerful at unlocking insights about the sustainability performance of your product. And can be really valuable in guiding for impact reduction, which is fundamentally what Minviro is about. The whole team of Minviro is very motivated about the benefits that we can make from environmental and sustainability performance across the globe. Just a bit more about Minviro. So we're headquartered in London, but we also have offices in Shanghai, China, and in Perth, Australia, and most recently in the Netherlands. Just in the Netherlands, we've set up an office most recently. But with that, I will head over to Rowan again to let him introduce RiseX.
Cool. Thanks very much, Rob. So at Rise, we build a technology platform. We use that platform to help digitalize, automate complex supply chains and operation flows. Our big focus is on delivering productivity, transparency, and traceability of goods and services as they move through these complex business networks. We often partner with companies or partner with businesses who are on a digital transformation journey. So a typical client is looking to digitalize some aspect of their business or implement a platform to help them streamline operations. And we focus predominantly on carbon intensive sectors. So we do a lot of work in mining, energy, transport and logistics, commodities movements. And then the platform itself is designed to allow you to quickly build, connect, and deploy these multi-party workflows. So it is a platform that is designed to optimize operations between numbers of companies, so a large number of companies in a supply chain or in a value chain. And then on platform, you can very quickly build, deploy, and start to optimize workflows across a network of companies. We work with Minviro in this context to focus a lot on compliance, specifically because we focus on the collection of primary data from source. And in this context, we feed that data directly to Cycle, and so that companies can use that information to inform their different models. And then also that data can be fed to Stephen and the team at neoeco to help streamline and optimize compliance reporting in that context. So our role in that journey is very much focused on collecting primary data at source, and we've got some clever technology that helps companies overcome the challenges around both collecting that data, but also getting comfortable sharing that data, making sure it's safe and secure, and making sure we can kind of get that data moving through those networks. We are actually headquartered in Perth with offices in London and none yet in Beijing or Denmark. But yeah, pretty global team actually. So we've got resources dispersed across all the different time zones. And yeah, we look forward to participating in the launch of Cycle and hopefully the global adoption of what would become a global compliance and reporting ecosystem.
Nice, cool. Thanks, Rowan. Steve?
Great, thank you. So neoeco is an all-in-one corporate reporting solution, a corporate sustainability reporting solution. So our premise, or my premise, is sort of around the fundamental issue that traditional methods don't make reporting granular and audit ready, and something that's continuously measured and managed all the way through to the end compliance process. And without that, it's possible to verify against financial statements and ultimately make real world business decisions. But that all starts with data and data collection. And so what neoeco has built for and is really great at is taking data, making it super easy to connect data sources, and reconciling that data against corporate reporting frameworks and ESG standards, but also making sure that that data is easily accessible, that it's audit ready, and that it can be verified. But also the premise behind neoeco is future-proofing against changes in regulations and standards, and having a super adaptable system that can move with legislations effectively. We're headquartered in London in the UK, and obviously have very close alignments with Minviro and the Cycle team. Yeah, cool. I think that's you, Rob.
Nice one. Great. So maybe to just make it very clear and transparent about where each of the parties sits in this type of workflow that we're looking at, we tried to create this visualization which can help with this. So if you imagine supply chain data connection, multi-party workflows that Rowan mentioned, RiseX is a great tool at being able to collect that type of data and have it in a trusted, secure framework that's auditable, but it can also connect to other systems. Now that data could be from a data that can be used in a life cycle assessment. So that could be inventory data, for example, how much material and energy is used to make a particular product or component. So that data can then be pulled into the Cycle platform, which we see at the top here. And then the cycle platform can be used as the calculation engine to do the product sustainability calculation, with the outputs being things like environmental product declarations, product carbon footprints, or life cycle assessments, aligning with product sustainability regulations. Now, that RISE-X data can equally be some slightly different data. That could be data such as a certified carbon footprint data point from a supplier that's being pulled through into the neoeco platform. It could also be other things such as, I can show you some other things when we get into the demo, but it could also be activity data. So how much of a particular material has been consumed, or some other information metadata that might be useful in that sustainability reporting. With the neoeco platform being able to have outputs to align with company level ESG reporting, greenhouse gas protocol at organizational level, things like CSRD, other things like specific regional regulations like the Transparency Act. Another thing to note is there's a symbiosis between Cycle and neoeco. So one thing that's fundamental to corporate sustainability reporting is the quality of Scope 3 data. So Scope 3 data inherently is a life cycle assessment. If you're going to have a good quality Scope 3 data point, that should be underpinned by a good quality product life cycle assessment. And that's where we have the option of that data flowing through to neoeco. And I'll show that in the demo as well, how that can be done. There's also a way where that symbiosis can work flowing the other way. So when we get to the neoeco platform, you'll see that neoeco is very powerful at connecting an enormous amount of business data. So whether that's transaction data, activity data, inventory data, that can also be very useful to create a very robust inventory for product lifecycle assessment. So that works in a few different ways. Great. So just to sort of clarify, I know we're sort of about 15 minutes into this, but just to sort of set the scene of what we're gonna talk about next. So Rowan's going to give us a good understanding of the importance of primary data and what good quality primary data looks like, especially in the context of a regulatory alignment. And then we will talk. So I'll talk about the importance of primary data and how it fits into specific product regulations, so things like the battery passport or the EU battery regulations, as well as other regulations. Steve can talk about some of those at a corporate level, and then we'll finish off with a walkthrough of the platform. So going through each of those steps, as I showed in that previous diagram, before jumping into a Q&A session where we can have some discussion on some of the future opportunities, some of the challenges that still exist in the market, and some ideas for next steps. Great. So back over to you, Rowan, to talk about the importance of primary data.
Thanks very much. So I'll go through why it's important or why it's helpful to have primary data, some of the challenges, and sometimes I think some of these challenges are barriers, but can also be myths. So some of the challenges around collecting primary data, especially across N-tier networks, or these multi-party networks of companies that work together in these supply chains. And then how we can use technology to try to help us overcome some of those challenges. And I kind of work on the assumption, or at least Rob's let me know, that most of the audience are in this area or practitioners in this context. And so I assume all have a good appreciation of the value of primary data, but specifically or in this context, accurate, specific, and up-to-date data from primary sources, meaning from the point at which it's generated. Could be a company, could be a manufacturing device, could be an IoT device, could be a third-party source system. But being able to pick up that data at source and pull it into a view and be able to use it enhances the efficiency and the effectiveness of your overall compliance management and reporting processes. But it also builds accuracy into those models and trust across all your different stakeholders. So you can kind of remove the noise where people are challenging results from the model. If the primary data comes from all the different sources and the model is sound in its philosophy and its fundamental, the way it's been constructed, then you kind of get an answer which is much more trustworthy, and that allows you to make much more relevant business decisions. From an accuracy and relevance perspective, getting primary data from your supply chain or from your customers and being able to look at that kind of whole picture gives you a much more relevant view of your business, which is often a lot more accurate than if you were going to use secondary data or industry averages, which can potentially skew the results and perhaps make your operations look either more carbon intensive or perhaps less carbon intensive, both being bad because they will affect the decisions you ultimately make, which should be in the best commercial interests of the company. So it does improve your decision making. It definitely helps with regulatory compliance. So if you do need to report, the fact that you are reporting on verified, certified data, and also that you can show and approve that, streamlines both the reporting process, but also any disputes. So if there are any issues around compliance and you need to be able to prove something to a regulator before you're able to continue to operate, it's nice to be able to pull up primary data at very short notice and be able to have that dialogue or have that conversation with regulator and unblock whatever operation you're trying to manage. From a trust perspective, I think it's important to build trust across the stakeholders. And I'd be very broad with that context in a sense. I think it's very important for companies in a value chain, so companies that work together, or companies, supply chain participants, people that might provide services to you, or your customers, people that you sell into, as well as regulators, governments across jurisdictions, et cetera, it's very good to build broad trust in the information that's coming out of these models. And if you can collect that data from verified sources, and you can show how that data has been, transformed or processed all the way through the process to the outcome, then I think people are much more inclined to trust the model and start working on solutions rather than to spend time challenging the model or querying the efficacy or the accuracy of whatever answer it gives you. And then also being able to share this data across supply chains, so being able to build transparent supply chains is, I think, important to deliver productivity specifically, and productivity goes a long way to improving sustainability in its own right. So it's just really good business to be able to optimize workflow across a network of companies. It makes everybody more efficient, so everybody's spending less money, using less resources to deliver the same outcomes. And that productivity goes straight to the bottom line. It also means that, from a sustainability perspective, less inputs, less resources per unit of output, overall improves your operations performance, both from a financial perspective, but also from a sustainability point of view. So it's a kind of a no-brainer, right, to use primary data in these modeling processes. And if it is a no-brainer, why is it so difficult to do? So why don't more people, gravitate towards it or just do it straight away? And there are a couple of challenges to collecting primary data, especially when you're looking at global supply chains. They're very complex networks of companies, and it's actually extremely difficult. It's a hard problem to collect all this information from all these, from a mosaic of different companies that you're operating with in some sort of network. It's kind of like you're trying to build a puzzle, but each party in that supply chain or each party in that value chain has a piece of the puzzle, and you've got to try and kind of coordinate everyone to put the right pieces in the right place at the right time to get the full picture. And it's difficult. It's kind of like it's herding cats. So it's difficult to collect it because it's across a broad network of companies, and you've got a stakeholder coordination challenge there. There's also challenges around data privacy, security, and ownership for sure. So, collecting data means you've got to look after it. You've got to keep it secure. From a data privacy perspective, you've got to comply with a whole nother raft of regulations, GDPR, and a whole bunch of other, data management requirements. And then there's also challenges around data ownership. Who owns source data, who owns the derived data, who generates value out of the data, et cetera, et cetera. And I think people realize how valuable that data can be, and especially the insights from processing data from multiple sources. And so discussions over who owns that result can also retard progress or make it difficult to get everyone to kind of agree to share this information. That also leads to limited collaboration and trust. Some of this data is very commercially sensitive. And people think very carefully about what information their suppliers can see, what information their customers can see, and most importantly, what information their competitors can see. So, as much as it makes sense to share data, obviously it also makes commercial sense to make sure that you protect the data that is commercially sensitive and provides you with some sort of advantage over your competitors. There are also technological gaps. I think those are sort of the top three are definite challenges. Now we're kind of bleeding into the myths. So there are technological challenges. There's no one global platform that does this really well. And we do still rely very heavily on legacy systems, especially in the enterprise world, right? And you also have this challenge where everyone's systems are different. If you go into a very large company that perhaps might have very advanced ERP systems, and if you're going all the way through a supply chain, you might end up at quite a small company or medium to enterprise company who might be on a completely different set of systems. And so both dealing with legacy systems is difficult, but also integrating all these systems is a genuine challenge. That can lead to cost. And of course, the other challenge that people constantly work on forever and ever is this sort of, and I think this is a myth, that you need some sort of data standardization. But of course, there is lots of different data types in different formats across these different networks, and kind of collecting them together and putting them in the same format or in the same context, making it usable, is definitely a challenge, but not an overcomable challenge these days. That one's kind of also more of a myth. So how do we overcome these challenges with RiseX? The platform we build is a multi-party platform. So it allows many different companies in the value chain or many different companies in the supply chain to participate on a common platform. It's not a centralized platform. It's very important, but it is common to all the stakeholders who are operating in one of those workflows. It's designed to allow us to optimize workflow, both commercial workflows and physical workflows, across lots of different companies in a value chain. So it allows us to coordinate and manage work in a very streamlined way so that collectively the network gets more productive, more efficient at producing outputs, whatever those outputs might be. To overcome some of those data privacy and ownership challenges, we use blockchain. The blockchain allows us, the blockchain is a distributed ledger, which Stephen will like from an accounting perspective, but it allows us to keep an account of all the transactions between all the companies in this kind of common environment, while at the same time protecting the commercial interests of all the stakeholders involved. So you can kind of share information where it makes sense, but you can also lock down that information and be very careful about who gets access to it under which context, using the smart contract features and functions that run on that blockchain. So effectively, you think about the governance of the process. We program that governance into the contract so that the platform kind of manages who has access to data, when they have access to data, and in what context they're allowed to use that data. We also make sure that we are pretty agnostic in terms of data format and standards, so we can ingest any data from many sources. So that might be third-party systems, it might be IoT devices in the field, it might be some interaction between a regulator and the platform, but we try and make sure we're as standards agnostic as we possibly can be, so that we can pull lots of information out and then use some clever technology, AI and other tech to kind of make sense of that data and then share it in a more standardized way. We allow companies to build on platform. So using AI and no code, they can deploy business processes very, very, very quickly. Certainly much more quickly than if you're in the old world of digital transformation. But that means the barrier to trialing or to working with these tools has come way down, right? You can quickly deploy something and also quickly iterate on something to make sure you're making sure that it fits the requirements of the business. Then we pull all that data in, we can share it with third parties, but also make it available for kind of real-time analytics and reporting. So it's very important, very useful. There are some challenges in obtaining primary data, but with the tech that we've built collectively between the three of us, those challenges are getting easier to overcome almost every other day. Thanks. I'll hand back over to Rob just to talk about the urgency of data-driven sustainability.
Yeah, for sure. So I'll talk a little bit more about the specific regulations in a moment, but just to really reiterate, I won't spend too much time on this slide, but really we're seeing a rapid change in sort of what's required around things like data traceability, but also requirements for primary data in regulations like the EU battery regulation, which mandates primary data. So there is this real sort of step change in what's required from sustainability reporting and calculations. And so it's really important to have these types of ecosystem solutions that reduces the burden for the companies and sustainability professionals to make sure that we can comply with these upcoming regulations. and whilst maintaining some of the important things that Rowan mentioned around security. But obviously, a lot of the things that Stephen and I are focusing on is around, okay, well, how do we use this data to actually transform them into sustainability performance or like impact reduction guidance? So I'll go on to the next slide, and this is just really a visualization, sort of thinking about the challenge that we have. So we have a lot of unstructured data in lots of different formats and lots of different types of data that's required to be organized, structured, and connected for different reporting requirements. So I think what we see on the left here is kind of the old world of pulling data either manually or through emails with spreadsheets attached, or in all sorts of traditional formats of data exchange. And then if you imagine the boxes above there on the left, that would be sort of the different jobs to be done by a sustainability professional. So they might have internal sort of metrics that they want to communicate up through the business, or there might also be some specific regulatory requirements that they need to report to, or maybe some data that they need to share with investors. And then if you look on the right, it's like an idealized view of, okay, well, the data is connected in a really efficient, logical way, being able to collect a lot of primary data. And the reporting ecosystem is like a single solution that can be flexible to report all different reporting requirements. So it's kind of like a visual entity. But Steve, did you have any comments in this, or Rowan?
Yeah, just to add, in terms of the way that the data structure is incredibly important to how it gets audited and verified back through the different layers. And you can see the diagram on the left-hand side, very, very difficult to audit that as a process and to verify it. Data structured on the right-hand side in that way, you can trace all the way through to source, which is ultimately what the auditor needs to do. And that just builds trust in the results.
Right.
And sure, and I'd add, I mean, it's very common, and I'm sure many of you on the call have a similar experience. But when we work with clients and we look at this problem, so be it compliance reporting or kind of corporate sustainability reporting or any other type of corporate reporting, it's not a very pleasant job, to be honest. So it's very kind of manual, very difficult, and very expensive from an overhead point of view. And typically, not always, but typically, it looks like sending out an Excel spreadsheet to sometimes hundreds or thousands of suppliers, collecting this data back, trying to put it into some common report and format it. Often there's some tweaking along the way, which I think is has its own set of challenges. And then slicing and dicing it to produce a number of different reports for different regulators across different rules and requirements and different jurisdictions. And it's mostly non-value add, right? So it's extremely time consuming. It has a significant overhead to it. And I think in the future, compliance should be, a click of a button stuff. It should almost come at very, very, very low cost. If you're measuring your operations and you're collecting that data, your ability to kind of slice and dice and report on that data should be something near automatic.
Yeah, absolutely. I also wanted to just touch on this. This is quite maybe a bit of an overwhelming figure, but I think it's important for companies to sort of maybe place themselves on the sort of sustainability maturity sort of framework that we have. This is adapted from some work by PwC. But you can basically see the separation of what Minviro, what neoeco is doing around the difference between product and corporate sustainability requirements. Both of those solutions require that good quality primary data, and that's kind of the visualization that we showed earlier. But what you can see is that the job of a sustainability professional is ever growing, and you can see that there's a lot of different jobs to be done that all require this good quality underpinning data. LCAs and so life cycle assessment, EPDs if you're in certain sectors like the construction sector, or product environmental footprint. They're becoming sort of mandated in a lot of regulations as we very quickly, which I'll talk about in a moment. But there's equally equivalent regulations on the corporate side. So yeah, you can see that there's many sort of values that this type of solution can add to. Just because we're on the half hour, I might jump on to the next slide so we can get into the demo, because I think that's kind of where we want to spend most of the time to see the connection in action. But maybe before that, I'll just touch on some of the what the value of doing these life cycle assessments for products and product carbon footprints. There's some business values directly outside of the area of regulation, but obviously this webinar is focused on compliance. But a lot of companies are doing LCAs to increase their brand credibility. They're also doing it to minimize legal risks. So there's, for example, regulations like the Green Claims Directive, which limits how you communicate sustainability performance of products. An example of that is, you may have seen that, a good example of that is, for example, the car industry in the last few years has said 0 emissions, but it's 0 tailpipe emissions, and that's pretty much to do with the Green Claims Directive, which requires sort of like good quality underpinning sustainability calculations and compliance to allow communication of sustainability performance of products. The efficiency and cost reduction is often overlooked. So when you're doing this sustainability work, you're often able to understand, basically, if you're looking at where the hotspots of the environmental impact are, you can often link that back to, okay, what's the cost of these different hotspots, or what's the cost of these different inventory items, and are there alternatives on the market? So we often integrate life cycle assessment with processes like life cycle costing or techno-economic analysis. And this really allows you to sort of integrate that economics with sustainability performance. And as a reminder, sustainability, under the definitions of sustainability, inherently includes financial sustainability. So that's a really important metric to capture. But as I said, the focus of this webinar is around regulations, and just some of the key factors or the key regulations that I've identified here. This is not an exhaustive list, but just to highlight how broad this is for the industry around product sustainability. So the EU Eco-Design Directive is a regulation which is drafted that captures a broad array of products. So we have the EU battery regulation, which is very specific to batteries, as the name implies. But what's interesting about this new suite of regulations is they mandate primary data collection in certain parts of the supply chain. So if we're looking at the battery regulations, they've drawn out a system boundary where primary data is required, and that includes stages such as cathode production, cell manufacturing, pack manufacturing, then going right through to your OEM. And the responsible party to report on all of that primary data is going to be the company that puts the battery onto the market. So that really needs a step change of how data is shared, and that's pretty consistent across EU regulations. So there are other regulations like the EU Eco Label, or regulations even outside Europe. Europe is obviously considered to be sort of at the leading edge of sustainability regulations, despite maybe the omnibus that has been so talked about, and I think it's just come out recently. But you also have regulations in other parts of the world. So the California Low Carbon Fuel Standard, there's regulations in Asia that are fast evolving, in Australia, and another big one which affects the construction sector around the construction product regulation. And just to sort of highlight how Cycle specifically helps with this compliance and regulation. So, inherently, when we look at this primary data supply chain connectivity, there needs to be collaboration. And that is the ability to have a multi-user platform controlling information sharing, but able to share that key information both internally within your team, but across supply chains is very, very important. Understanding the underlying data. So the data can be complex and from multiple sources. So the data navigator tool, which I'll show into the demo, is very important. Planning and reporting. So they're part of the same sort of process in a way. So, you're reporting on the reality of what you might have today, but you also need to plan to comply with future regulations. So the EU battery regulation also talks about a maximum carbon footprint threshold that it'll implement over time. Now that needs to be planned. You can't just from one day say, okay, we're gonna adhere to that. That needs to be planned and modeled. And so creating these scenarios as a business is really, really important. And also auto data collection, which is what we're talking about today, really about how do we get that good quality primary data. That's a super important feature. Steve, over to you about neoeco.
Yeah, so again, just adding on to what Rowan and Rob said, the huge challenge is that data collection, and obviously the holy grail is that primary data. But what neoeco does is it brings in financial data as its first sort of layer, and within that, we also bring in wider operational data, HR, and regulatory data to automate that connection. And again, as Rowan mentioned, it can be quite a scary and large process to try and tackle. And so our approach is our automation, APIs, connecting the data, making it as real time as possible. And it is possible with technology in this day and age. And the idea being, as Rob mentioned, it shouldn't just be a once a year annual box ticking compliance exercise, although that is driving. To be able to make real world decisions, you need to be managing it and reviewing and looking at this data regularly as your financial transactions and treating it with the same respect and rigor. And so that's the approach of neoeco. Obviously, the end goal is to map against all the relevant frameworks and to meet your compliance obligations at a corporate level, but it really starts with the data. And I think we'll show you that as we sort of walk through the demo.
Cool. So demo time. Nice. So I'm going to start off by basically going through the process as we defined it. So I'm going to start off by highlighting what it might look like for, a data collection process. So I've built out a very simple product lifecycle assessment data collection request. So in this instance, I've pre-populated some aspects of this data collection workflow. This is in the RiseX platform. You can see that I've asked for information around steel production from a steel supplier. And so you can see in this instance, I've got a couple of people that have access to this, and one collaborating company just being Minviro in this instance. But one thing to bear in mind is around the security, and something that I think is really powerful about this is you can see exactly who has access to the data that's submitted, and that can be controlled in a very robust way. So then the next stage, and to be clear, so I want to maybe give Rowan a chance to sort of talk about the flexibility. This is a model I've created very specifically for the lifecycle assessment application. But do you want to just talk a little bit about how flexible it is to create these different workflows?
Sure. So what Rob is showing on the screen is what we would call a workflow. And as an end user, and you don't have to know how to code, you can actually build these workflows out pretty quickly. There's a couple of different ways to do it. We've got quite a robust AI engine. You can feed that AI engine information about processes you already have. So if you've got a process description document, or you've got a form that details how a process works, you can kind of drop that in and it'll build it for you, and everything it builds will be compliant. And then you can there's a no-code editor, so you can drag and drop and manipulate these workflows and make sure that they fit with your requirements. And then they're multi-party, you can kind of share them with everyone. Multiple stakeholders can participate in the same flow. So we're big proponents of building these things out end to end. But yes, very flexible tool and designed to allow business to adapt very quickly, which I think is very different to your standard enterprise infrastructure, or we'd call it legacy enterprise systems. If you're operating in a kind of old German asset management system and you're trying to get a field change, some of you will appreciate how painful and how long that can take, how painful it can be and how long it can take. Here we want business users to be able to make change, continuous improvement very quickly. We don't want the system to impede that. So we've designed it to let end users make changes to these processes without needing any code, and to be able to do it very quickly.
Very cool. Thanks, Rowan. So you can see there's three main sections that I've created in this workflow. One, which is actually creating the data request. So who do we want to send this data request to? And all you need for that is an email. So we can send just it through, it'll be a secure link through an email. I've then sent it to myself so I can show you this next stage, which would be actually capturing the data. So you can see that I've completed this project information, which is steel production, a ton for a particular company, called them Kappa Logistics in this instance, saying it's in Sweden for a period in 2025. This is then unlocked this stage. So this is only unlocked to the stage where the request has been sent to. So what you can see is the data passes from me. We've got a bit of guidance in terms of what information to add. And so we can see that the output is 1 ton of steel, but maybe we need some additional items in this. So maybe let's say we've got some iron ore, which is needed. Maybe we've got some other material that's required, and we can select sort of say that's as a material. Let's just say that's 1 ton. This would be a very efficient system in this instance. There's also, you can highlight what's mandatory data. Again, this is really useful because some of this stuff is what's required from like a regulation perspective. So say we're happy with this data. We've got all the required information here. We need to actually add it here because you can see that this is required. You can add evidence. So this might be, upstream invoices, or it might be like additional measurements from equipment. But if we're happy with this stage, you can see that this is unlocked up here, and we can submit this. Now we can submit this to a third party to review and sign off this process. I'm going to send this to myself again, so it unlocks it for me, so we can see the process. But this is very useful that it could be a separate party, because then you have that sort of validation, and then we can sign this, and then we could submit this. So all good, review completed, and then we can just add a signature, or we could do a manual signature, and then we could submit this data point. One thing I wanted to show, though, which is very useful, is around that auditability. So you can see every single sort of activity, who has input the data, and this is very useful if there's some sort of error or correction that's needed in that underlying data, or you get questions or queries from an auditor downstream. So if we submit this, I'll submit it to myself again. So now I've got a submission that this data point has been completed. I've got a complete inventory that's been generated. We've got ticks in all these stages, and that can then be pulled into this next stage. So this next stage is like, okay, what do we do with that data? How do we transform that into product sustainability data? And this is on Minviro's Cycle platform. So what you're seeing here is we've got that production of unalloyed steel and transport of that steel to a customer. And you can see that in here, so this is a more complete list. So if I just hide some of these, so it's a bit more clear for the audience. But what we can see is we have all those inventory items that would be pulled from that previous stage. And we have sort of a more detailed flow of the processes to make this steel that's transported to a customer. So we can click on each of these, and we can see that they've also been connected to background data points. So for example, if we want to find, let's look at this, I'll just reconnect this one as an example. So we have limestone as an input for this pig iron production. All we need to do to connect it to a background data point is to search this function, and now we can see we're searching now some databases that you might require. So we've got EcoInvent in this instance, and we can see that we have different options for limestone in different regions. We also have the impact of those data points here. Now we can open these and jump into more like metadata to make sure we're connecting to the correct data points. But in this instance, I'll just show you, let's just map this, and then you can see that that's been calculated automatically. That's already calculated dynamically as we go. So we can also very quickly look at the impact of this steel. So we can look at it by input, or we can look at it by unit process. So we can start to see the impact of this product. We can also run scenario analysis. So I've already built this, so I won't spend too much time on this, but I'll just show you what if we are able to, rather than, if we're able to implement a direct carbon capture of the CO2, for example, what does this comparison look like in terms of impact? And we can see a huge impact reduction opportunity. Now, I'm not saying this is feasible for this particular project. It's just illustrative to highlight how you'd run those scenario analysis. You can make very quick comparisons. The last thing I wanted to highlight was just how you synchronize data from the upstream. So say, for example, a supplier updates an underlying data point, and I'm going to show you that at a very high level. So if I just go onto Coke production and I say, okay, they've made an error in their underlying data point, and now they're actually using a lot less. So if I now go back to this one, you'll see that I now have a notification that says, okay, a supplier has updated their data point. We now can see that we've got a little sync button here, and we can choose whether we want to sync that. We preview it first, and if we're happy with that, we can apply it. If we're not happy with it, we can go back to the data collection phase and see what's happened. And then we can apply that, and then your model has been updated. Great, so that was a very rapid run through of basically how we do this modeling. We can set these rules to align with the regulatory requirements. And then how do we leverage this data into the corporate sustainability platform? And what we can do is we can simply click on this output product, and we have this connection, so we can share to neoeco. On neoeco, I've got multiple platforms in here, so I'm just going to show you this demo account. So let's import this. So I'll just show you basically going through this platform and maybe starting just with this first page, which is kind of looking at a dashboard view of the company. And this includes data like the carbon intensity, the intensity to spend, and the data quality, which is really important because that will dictate how much primary versus secondary data that you have. You can see impact by supplier, scope, and account code. Very flexible. So if we wanted to look at specific impact data to do with manufacturing overheads, we could refine that. In the data studio, this is where we can connect loads of different data points. But Steve, what's the sort of strategy in terms of how we're putting data together here?
Yeah, so foundationally, we're a financially integrated solution, which means we start with accounting ledger data as the base, and essentially we're layering on activity data, primary data into those financial data points. And the reason for that is to create that closed loop system that can be audited and verified for a particular period of time that relates to business activities. And the end result for that, which I'm sure you'll walk through in a minute, Rob, is essentially these sort of quantum financial sustainability ledgers with tons of different data points, super granular, that can then be chopped and changed and reported dynamically across the frameworks. Very cool.
So once you connect those data systems, you sort of have this ledger here that Steve mentioned. So you can see all the suppliers and accounts. And then you can reconcile these data points with the background data points, similarly to how you would in Cycle. I think one of the things that's really interesting is that we have the ability to connect activity data to sit on top of financial data. So you basically move from spend-based to activity-based in a scalable way. And I'll show you what that looks like in practice. Before that, the reconciliation can either be done manually, or you can set up rules which are really powerful. So you can set up rules, say, if we have certain suppliers, or if we have, certain account codes or different information, you can auto match to certain data points. So that can be really time saving and scalable. We also have an AI solution which auto categorizes that, just using auto match, and that can be for current transactions or all transactions. The activity data, this is, for example, if you have an invoice with the mass of consumption, and I created a little example of this for the demo that we've shown. So if I look to upload a document, all I need to do is go into here. I know that I've got sales quote 2. This will just be uploaded and will be processed. So it's just processing at the moment, and now it's processed. So now you see I've got a new data point, and I can see that I've got 9,000 kilograms for that amount. And now if I want to reconcile, if I go on to, I know there was one that was pretty relevant for this. So now I know that this Kappa Logistics, I want to connect this particular data point here. And all I need to do is map. And now this activity is mapped with the quantity that matches the amount. And I'll just go back onto that activity data because it's quite powerful. So if I just search for that supplier that's already reconciled, I can now look at this particular source. I can see that this is AI extracted the key information to match. So you can see that this is an invoice that we've got from a supplier, and we can pull that data. Maybe the outputs of this is different types of report structures. So Steve, maybe you want to touch on the different types of reports and the flexibility to send this to different report structures.
Yeah, so the premise behind neoeco is that we're moving away from an annual compliance exercise to something that can be done weekly, monthly, or quarterly. And so the report builders that we generated, similar to RiseX in the terms of how easy they are to sort of drag, drop, build with no code required. We make it super easy to build scalable reports that make it really, really consistent. We bring in all the dynamic data points within neoeco. And the idea is that this becomes an internal management tool as much as a compliance exercise. Obviously, what measures gets done. And yeah, you can kind of pre-build your own templates. We have a load of regulatory aligned templates as well that are pre-built, so aligned to the CSRD, the SASB standards, TCFD. All of these are sort of pre-populated with the placeholders for the data that you're collecting and reporting across the neoeco to make it super easy and scalable to deliver.
So you can see an example of that dynamic data connection where I sort of just added some text with a KPI around the climate change impact for 2024. And you can build these, and that's really powerful because you can build sort of multiple report structures where the data connects in different ways that you might want it to. So we've only got around 8 minutes left. I thought there's a really interesting bit of work where we've collaborated with a partner on the materiality. Maybe just touch on that for 1 minute, Steve.
Yeah, so Rob, if you go to step A and just bring up the materiality, and maybe just let's search for BP as an example. Essentially, the fundamental starting point in the process of corporate reporting is obviously the double materiality assessment. And so we need to, this is super important for knowing which data we need to be collecting and where we need to be focusing our efforts and in which particular areas. And so what this materiality assessment module does is it follows the CSRD framework and uses open source technology to combine internal data with external data. So this essentially looks at the conversations that are going around on the internet, all the major news sources, social media, and does a really smart sentiment analysis around the CSRD and SASB categories, and it automates that double materiality process. So you can get to a result really, really quickly and get started on your journey. And it really sort of helps to laser focus where you need to be, focusing your efforts in terms of data collection and looking at through the lens of materiality rather than a scattergun approach. And obviously, it's step one in the compliance process, and the wider application of neoeco is the compliance module that will be officially launching end of March, which guides you through the standards and essentially becomes the working papers and the internal management process system for walking you through the CSRD, SASB standards, any other regulatory compliance exercises that you need to do. And it's an internal team collaboration tool as well. But the idea, again, the whole premise of this solution is something that can be audited. So from the compliance center, you'll be able to take and validate that data all the way back through the system, through neoeco, through cycle, ultimately through to the end application in RISE as well.
Nice one. Thanks. And that's a partnership with Metal Capital that we have for this materiality work. There's also some, I'll jump on very sort of look at these sort of, you can set some targets at a company level as well and look at the forecast. So connecting your financial forecast with your target setting. But we only have 5 minutes left. So I think we should keep some time for some questions. So I'm going to just jump back into these last few slides, which I think is the Q&A, which is good. So I'll stop sharing and then we can jump into the Q&A. Right, let's see if we've got any questions here. Great. So we have a question from Luke Pez, which I know that Rowan's messaged directly onto the chat, but it might be good to raise this. So how can you help me understand how you can overcome IP issues related to workflows and flow sheets?
Sure. It can be a tricky question and often a bit of a minefield, to be honest, but the simplest version, so the principle we use is that whoever builds the workflow or whoever brings the initial IP builds that workflow and then retains ownership of the workflow. So if you're the workflow builder, then it's your IP. You're then using that application to work with others and collect that information. I think the more interesting topic is around derived data. So if lots of people contribute data and then maybe an algorithm takes that data as an input and derives an outcome, then who owns that outcome, which is often very important, and how do you share that outcome back with all the relevant stakeholders? So it's certainly a conversation, but it's almost very use case dependent. But the principle is, if you build it, you own it, or if you bring it to the table, it's yours. Certainly from our perspective as a company, we don't retain the ownership of any of the workflows that get built on platform. And in the case of the Minviro example, for example, that platform is built on top of our platform, but is fundamentally a Minviro product where they've built workflows specifically designed to collect the information you need to do this LCA modeling and other compliance reporting. And so the ownership of those workflows stays in this context with Robert because he's the builder. So I don't know if that helps, Luke, but it can often be very use case dependent. So I'm happy to discuss it if you've got a specific example where you've got some considerations that we haven't addressed.
So he asked about how that data, so this might be a good one to maybe I'll answer from the life cycle assessment perspective and the regulations. So it is a massive challenge. So that mandated primary data, for example, in the battery value chain, requires a choice of either primary data sharing all the inventory data with the next stage of that supply chain, or you share a compliant data point that's been verified by what they define as a notified body. So there is a way of protecting IP, but the challenge is in the existing infrastructure that we have, that becomes a very expensive process for the supply chain to do the verification at every stage. That's why this innovation and evolution of how this is done is required, because we need to have that sort of auditability with protection of IP. But Luke had a question around sort of the application of how maybe the intersection between the data that you collect and the AI usage in RiseX.
Yes, I think that's a good question. And just to address it, so we actually don't have access to the data, Luke. So the way that those contracts are designed, the smart contracts that run on the blockchain, only the people that have access to that contract, so our participants in the workflow, get access to the data. So we actually don't have access to data on platform. We can't get to data that we aren't given access to. And then the same applies for our AI. We actually don't necessarily, at least not yet, give that data to any AI or any large language models. The AI tools we use are more for accelerating building or for potentially optimizing or executing workflow. But that's all a query that goes out and gets a response back from the AI that we leverage on platform. We don't take any data from platform and send it off platform. So that means that there's no third-party service or no AI agent that's reading that data, and we don't have access to that data. And even if you sort of don't discriminate between the AI agent and us, the fundamental principle still applies. So unless you give something access, unless you give us access, or unless you give a service, so let's say an AI agent access to that data, then it just can't get it. So it's up to you who has access to that data. It's not a platform on platform by default. No one has access unless you let them get access.
Cool. We have one more minute, and I have a question, which is probably to Steve, which is, who do you think will be the verification or auditors? So what I'm asking is, like, we have the world of product sustainability, which often has like verification bodies that will sign off so you can communicate impact of results. Do you think that role for corporate sustainability will be done by verifiers, or do you think it's going to be follow more of like the accounting world where you have auditing bodies?
It's a very interesting question. Obviously, there's certain ISO standards that need very specific type of auditors that come in. However, the accounting world is moving very quickly, and I think auditors, CPA firms, accountants, top 4, Big 30, they're all looking at this and they're wanting to get involved. And yeah, I see a future where it's accounting firms and auditors that will be verifying this, particularly at a corporate level, because the information lands on financial statements ultimately.
Great.
AI auditors, people auditors.
Probably both.
Could be
probably people
both.
using it.
Yeah.
People using AI.
Yeah.
Anyway, so we've reached time. So I really appreciate everyone joining today, and really enjoyed the conversation. Yeah, just feel free to reach out to Rowan, Steve, or me. This session is also recorded, so it's also going to be possible to go back to it. But we're always happy to answer your questions that you might have afterwards as well. Thanks so much for joining, and have a good day.